Welcome back to this special chat with one of the doyens of Indian banking, Mr. N Vaghul, founder and former chairman of ICICI Bank. Remember, he started his career as a public sector banker and was witness to the first meeting, as he just told us, between L.K. Jha, the then RBI governor, and public sector bank chairman, one day after the nationalization of banks in 1969. So we are getting someone who has been almost present at the creation when banks were nationalized. Okay, Mr. Vaghul, now how do we set it right? Like you said, you want a radical change and this law won't do. Dr. Urjit Patel makes the same statement. He says public sector banks don't have market discipline. They are not worried that their deposits will be pulled out even if a fraud or a large NPA is created. So would you say, you know, government stake has to come down below 50%? Is that the way out?
These two issues will have to be separated, Latha. One is the control function, another is the ownership function.
Okay.
I think Mr. Narasimhan, I should credit him with this statement 27 years back, that you can segregate these two functions.
Oh.
It does not matter who owns the banks.
Okay.
What matters is who controls the banks.
Okay.
And today, it's not very clear who controls the banks. Is it the central government which is controlling the banks, or it is the Reserve Bank of India which is controlling the banks? Now, while in 27 years back, there is no problem whether the government owns or not. Today, I think it has assumed a further significance because it doesn't make sense for the government to continue to own even 51% or 60% of the banks.
Okay.
Because the government needs money for a whole lot of other purposes. Why should they continue to hold it? If they are going to give up control, I think they can as well give up that ownership.
Okay.
And so that means that amendment to the legislation. I mean, in a sense,
okay, let me take both those questions separately, sir.
Not radical, but it seems to me that
no, I take your point, sir. Ownership is definitely more radical. But first, let me come to the control function. As Dr. Patel points out in his speech, because of that BR Act Clause 36, the RBI cannot remove board members, cannot of the PSU banks, cannot remove the management, the managing director, or supersede the board. Is it those clauses that have to first change? How do you ensure that the government has no control functions?
I mean, the government has to give up that control function. The Reserve Bank of India Act will have to be strengthened so that the Reserve Bank's control over the public sector banks, it can go in stages.
Okay.
The first stage is what was suggested by Urjit Patel, that you have to amend the Reserve Bank of India Act in order to vest them with the complete powers in order to deal with the public sector banks. I mean, he quoted that as in the case of the Industrial Development Bank of India, if it can be done, why can't you do it for the public sector banks?
Okay.
So those lacuna can be filled up in the first stage.
Okay.
But I think within very short time, you will have to move to the final stage of the government getting out of the banking system.
Okay. You know, Dr. Jalan was in the same series, reimagining public sector banks, that I did. He was there on my show last week. His recommendation was that you must have a body like UPSC. I mean, India has produced some genuinely autonomous bodies like the UPSC or the CAG or the Election Commission. Have someone like that to appoint board members. Is that a fair mechanism?
No, I don't think that we can swim against the current. The banking sector, I think we have got an independent regulatory authority, the Reserve Bank of India. I don't see any, you cannot create a parallel authority to the Reserve Bank of India by diluting its powers. I think this system will not work under this system.
Okay. Okay, let me come to the ownership part, sir. Do you think we have to first fix this control mechanism and only then go for ownership? In the same series, I also spoke with Raghuram Rajan a few days back. His only worry, of course, he thought that we should experiment with bringing down government stake, wholeheartedly agreed with that idea. But he said at the moment, the whole governance function is broken. So if you reduce the stake now of the government, then it becomes a problem who is responsible. So let's first fix governance. Would you say that should be the sequencing?
Yeah, but you can do one more thing. Another possibility. I mean, I'm just speaking offhand because I was not prepared for this. I haven't applied my mind to that.
Sure.
The one way in which you can do it is to transfer the ownership from the government to the Reserve Bank of India.
Oh, okay. But I thought
after all,
sometime back.
1955,
Okay.
when
So sometime back when the RBI still owned 28% stake in State Bank, they thought that this is anomalous, that we own the bank and regulate it, and they transferred their ownership to Government of India. So RBI finds its position anomalous if it owns a bank. You think, but that's an okay situation?
No, but say today there is a bank, the legislation permits the divestment of the public sector banks to the extent of 49%. I think you now need to amend it only to say about 100% can go to the public. When you talk of privatization of public sector banks, what do you really mean? You don't mean that you are going to hand it over to an industrial house or somebody who will take control over the banks. What it means is the privatization is a broad public ownership. Like what ICICI Bank is, HDFC Bank is there. No one individual family owns this ICICI Bank or HDFC Bank.
Yes.
I mean, when I left ICICI Bank, our shareholding public was about 500,000 shareholders.
Yes.
So they are the ones to whom the bank's board is accountable. Something similar to that will not hurt the interests of the public or will not hurt. I mean, nobody can say that the government has sold to their family jewels or family crown to somebody else. Okay. They're selling it to the public.
Okay. I take your point then that you want government ownership to come below 50% rather dramatically, as well complete dissociation of the government from appointing any board members or managerial top management in public sector banks. That's the point you're making, right?
Yeah, I mean, let me add one more thing, one small issue.
Yes, sir.
So long as the government is holding that control function, the government's control function theoretically exercised by the Department of Banking or the Finance Minister, but still, I suppose, legally, it is the appointment committee which appoints everybody.
Okay.
The appointment committee appoints the chairman, the appointment committee appoints the managing director, the appointment committee appoints the board members. And look at the bureaucracy that is involved in this whole process. That every paper has to be processed, it has to be put up to the appointments committee. The appointments committee consists of the Prime Minister, the Home Minister, and the Finance Minister. I think we can't afford that luxury of this process to continue.
Okay.
I think we need to devise a much better, simpler mechanism of identifying the most appropriate people to run the organizations.
Okay. Well, sir, you know, we are running out of time, but I wanted your thoughts even on the other big issue that Dr. Patel raised in his speech about the amount of NPAs in the system, 8.5 lakh crore, and still counting, and therefore defending the recent RBI circular that if large cases are not resolved in 6 months, they should be sent to the NCLT. Your general comment, do you think this is the way to go and the RBI is right in taking that stance, rather severe stance?
Yeah, I fully agree.
Okay.
In fact, I have been advocating it for quite a long time. Namely, if a default has taken place, I think we have to fall in line with the global practice. There is no reason why India should stand apart from the global practice in respect of this matter. If a default has taken place and the default persists for some time, I think the only way in which is to go take that to the insurance and insolvency and the bankruptcy code. I mean, Latha, we have tried with so many measures, including BIFR, Securities Act, and also the Recovery Tribunal. Nothing worked.
Yes.
We have to make this work, insolvency and bankruptcy court. This is the only way in which it has to go.
Okay.
And every defaulter, if he cannot, to take care of the default within a specified period, it has to go to the Insolvency and Bankruptcy Code.
Okay.
See, ultimately, the country to me comes first rather than the promoter or the banker.
Fair enough, sir. Fair enough. Mr. Vaghul, are you happy with the way...
Country's interest can be safeguarded.
Okay. No, I just want to ask you, since you're personally involved in the Arcelor bid for SR, and therefore you are a close observer of the process, you're happy with the way the process has gone, the amendment saying that, defaulting promoters ought not to put their hat in. Are you happy with the way things have panned out?
No, I am not interested party in the ArcelorMittal. I was a
you were
director
in the
of
board
ArcelorMittal about a year back.
Yes.
And today I have absolutely no interest.
Oh, okay. I didn't know that.
I was in the board and I'm no longer in the board.
Okay.
Since they are, I'm no longer in the board and so there's no interest involved.
Okay.
To me, I mean, these issues, whether a person is eligible or not eligible, will have to be decided by the bankers who are the most appropriate people to decide whether this scheme would work and whether they will get their money back and whether the company will be managed by people who are best equipped to run the company. Okay. I am not going to give them any suggestions that, I mean, to me, the letter of the law is not important. The spirit of the law is important. And I think the spirit of the law, you will have to bring the best person available to come and manage the assets. I mean, I take a very much broader view.
Yes.
The assets that have been created on the ground has to be managed for the best interest of the economy.
Yes.
They have to be productive for the economy. Whoever can make it productive, whoever the lenders feel comfortable they can make it productive, they should be brought to the end.
Okay.
And I think you cannot take shelter under one letter here, one clause there, which disqualifies people.
Okay. Mr. Vaghul, it was a pleasure listening to you, sir, from start to finish, the way in which the Nationalization Act was conceived, the way the first governor envisioned it, and how the current governor faces the same dichotomy, the same problem, and how the government should go about solving it. Thank you very much indeed for joining us in what has been one of the richest conversations we have had on CNBC TV 18.